Hi, everybody. Welcome to another edition of VCTV with your host, Kyle Ellicott. We've got a fun episode for you today, and we're going to be speaking about a very important subject, and that is early stage venture capital along with seed investments. Now, on previous episodes, we've recapped what we're seeing around early stage right now, where we're seeing bigger valuations and bigger fundraisers along with more frequent funding, along with more venture capital funds coming to the table, ready to deploy in all industries, from Web3 and decentralized finance to healthcare, to cybersecurity, to gaming, and to much more. And we're joined by an outstanding cast of investors, a part of the VCTV family, to share their thoughts and insights and also open up how they think as investors for those who may be fundraising in their first or second early stage round as well, to kind of give you a little bit of an early mover advantage on that fundraise as well. But before we start, a quick introduction. And a big thank you to the Token team, to Maria and Hasmik, for making today's episode possible. As your host today, Kyle Ellicott, let me welcome all of our guests. Vandana, a quick introduction and background for everybody, please.
Yeah, hi everyone. First of all, a very big thank you to the Token team for arranging this wonderful show which connects people all over the globe. I'm very happy that I could meet my friends Raghu, Harsh, and Jason today, and the new participants. Thank you, Kyle, for having me here. So, introducing myself, I had my own family office in Singapore and Jakarta. I worked as an investment banker and advisor to family offices and angel investors in Jakarta, Indonesia, helping startups from a diverse background from fintech and B2B tech all the way to consumer startups. I was raising funds for them and providing them with a range of services, just as Convanto does today. After 15 years of staying in Singapore and Jakarta, I came back to India. I did investments for a bit and then returned to advisory. That is when Convanto was founded. Today, Convanto is one of the most well-known boutique investment banks in India, led by a female founder. Today, I'm also a venture advisor with Loyal VC, the INSEAD-led Canadian VC fund, having a core portfolio of over 160 investments in more than 35 countries. I'm also a partner with GST Venture Studios, a Silicon Valley-based venture builder. Over the years, I've arranged funding for startups and growth stage companies in diverse sectors like edtech, fintech, consumer, B2C, B2B, agri-tech, health tech, food tech, disruptive and deep tech, as well as non-tech sectors. I would recommend all of you to have a look at my website for the wonderful testimonials written by my clients. I have been selected as one of the top 10 women leaders in Wealth Management 2021. My brand Convanto comes under the top 10 women entrepreneur brands in India. My expert opinion is often sought by leading business news channels and publications like VCTV, Business World. I've participated in 160 plus talks all over the world. You can easily see them on YouTube and VCTV streaming sites. I'm connected with 300 plus investors globally. We pick up global deals. We are sector agnostic, and typically we do $1 million to $50 million. And once again, thank you for having me here, Kyle.
Absolutely, and thank you for being here. Jason, a quick introduction and background for everybody, please. Oh, Jason, we might have a technical issue there, so we're going to come back here.
Back.
Oh, there we go. All right.
Sorry, I was muted, the dreaded mute button. Thank you, Kyle and the Token team, for having me. My name is Jason Jacobsohn, managing partner with Propellant Ventures. Personally, I've been involved in the entrepreneurial and investment landscape for the last 20 years in the Midwest region of the U.S., and more specifically, Chicago area. Propellant Ventures is about bold investing and powering the future. We are a seed stage fund. We focus primarily on early seed and pre-seed B2B opportunities throughout the Midwest region. We can come in as one of the first investors. We can lead the round, but we feel there's a funding gap at the early stages of VC funding. So we've made several investments in industries such as future work, supply chain, ed tech, and remote tech. So we're also like health tech and fintech and other B2B industries. But happy to be here, and thank you, Kyle, for having me.
Absolutely. Always happy to have you. Raghu as well. Welcome back. Short intro and background for everybody.
Thanks, Kyle and VCTV. Always enjoy these shows. I'm Raghu Rao, a serial entrepreneur, angel investor, and strategic advisor based in Princeton, New Jersey. My areas of interest are, cybersecurity and deep tech in general, including biotech as well as clean tech. I look for investments that have a large impact, especially in terms of having a technology that is already past the kind of concept stage. If you look at biotech, it's past the discovery stage, and working on some very interesting deals, and with some of the members on the panel as well. And look forward to discussion here. I'm also an operating partner on Open Hearts Fund out of India and Singapore, which is a deep tech fund, and they are more of emerging Asia fund.
Wonderful. Thank you very much, Raghu. Nicole, welcome back. It's been a minute. It's always a pleasure. A little intro, a little background for everybody, please.
Hello. Good morning. Good morning to everyone watching the show. And when you watch it, maybe later during your time zone. It's morning here, as you can see, in the Silicon Valley. I'm super happy to be here. And what I'm focused on is helping companies raise money. So I have two different sides of my life. One is that I have a marketing strategy firm, marketing, branding, and helping companies with growth and valuation. That firm is called Outfront Solutions. So that's what I do much of my day. And the other part of my day, I'm looking to invest in companies, and I'm an advisor to How Women Invest. So How Women Invest is a fund and a firm focused on investing in female-founded and female-led businesses at the early stages. So we invest in those companies that have technology-forward offerings in the market, and we are deep into Fund 1. We raised Fund 1 very rapidly, thankfully, last year during COVID in just 6 months, which showed a great appetite for investing in these female-founded, female-led companies. So that's really exciting. I'm also a venture partner for 2 other funds, Seed Milestone, investing in the seed stage, as you can imagine, as well as Andra Capital that invests in later stages. So I'm sitting on both sides of the table, looking at how companies raise money and investing in them. So it's a great vantage point, and I'm grateful to be here today with all of you.
Awesome. Guys, I told you, this is a rock star panel of a cast of characters for the VCTV family. We're just getting started. Andy, real quick introduction and background for everybody here on your first episode of VCTV.
Yeah, well, thanks for having me on the first time, and sounds like quite a panel that's gone before me. So my name is Andy Lower, founder of ADAP, a different approach to poverty. We invest very early in businesses having impact on extreme poverty in the emerging markets. To date, we've done 23 investments. We are currently closing our final round for our second fund that has 12 investees so far, and we're looking to invest in 5 to 10 more. And we are sector agnostic. We're looking to work with businesses that are looking to grow rapidly, but also while they grow, continue to have an impact on extreme poverty. We're very inclusive. So we have 90% of our founders are female founders, and over 60% are people of color. And the secret sauce of what we do is that we advise the businesses post-investment to help them to generate all the foundations that they need to be able to grow.
There you have it. The secret, not so secret sauce now, everybody. So now Andy has released that information.
It's all come out.
There it is. Big breaking news today. Headlines on Tuesday, September 14th. And Harsh, close us out with your quick introduction and background, please, before we get into today's subject, talking about early stage venture capital and seed investments.
Sure. So my name is Harsh Shethia. I'm a VP with our ventures. Typically, we help startups raise funds all the way from $250K all the way up to $20 million. I do a combination of debt and equity to ensure startups don't kind of lose out too much equity right in the beginning stages. So that's what I do. Additionally, I also do a lot of growth partnerships, strategic growth collaboration, and helping startups grow their business. Maybe it be in the health tech space or pharma space or whatever other technological spaces which I'm connected in. I help them with growth collaborations to help them accelerate the revenue 2x or 3x within a year. Thank you so much.
Thank you all, guys. This is a rock star panel. I mean, we got through that quick. This is awesome. All right, let's jump in. Again, today's topic, early stage venture capital and seed investments. Question I have for you today to kind of kick us off is valuations pushing up higher. We're seeing, and around the world, might I add, it's not necessarily location dependent as it used to be in the past. Globally, we're seeing valuations rise. We're seeing more companies come into the markets looking to raise venture capital of all different types of sources, whether it be angel to syndicates to venture funds, family offices, you name it, it's happening. Those rounds are getting bigger. They're also getting more frequent as well. Is this a good thing? But more importantly, how long does this activity last? At some point, this has to slow down. At some point, we need to start focusing on different sectors. Things may change or may they not. What is your view, each of you as investors, on the current state of early stage and seed investments? Are we just gearing up and this is just going to compound and get bigger? Or are we about to reach a point where this is going to slow down from an investment standpoint? Raghu, I saw you smirking first, so I'm going to come to you. And then Andy, Nicole, Jason, Harsh. So Raghu, kick us off.
Sure, I think it's here to stay because technology has become a kind of existential part, of pretty much all sectors now. And I think the pandemic has only accelerated it. So the adoption has become easier and it's become necessary. As you know, one area, obviously, cybersecurity, you can see the ransom being paid out, $20 billion or whatever, and the cybercrime rising. So that's just an example sector, but every sector, I think the healthcare, the technology has now become more acceptable. And so the tech that's, I think, driving a lot of these valuation increases. And of course, there will be, the real winners will be the ones that can deliver. So, but it is going through a stage where technology companies are, I think, receiving better valuations than they were before. Peter Wagner's article on the 2020, I mean, he hasn't yet come out with the 2021 study, but it was about $3 million was median raise at about 11 million median valuation, right? This is early stage. I would say, I mean, pre-seed and seed, together, depending on, which one you look at. So I think it's probably much higher. I would say at least about 20 to 30% higher this year. So I think it's here to stay because the technology resources now are globally available. So some of the arbitrage costs have gone anymore. The arbitrage has gone down because the costs have increased in other locations. So.
No, it's a very good point. Andy, additional thoughts, anything to add on kind of this momentum that we have around early stage?
Yeah, I agree. The real winners are going to be those that can deliver. I think there are going to be challenges. We are dealing with it across our portfolio at the moment. Those that were on a typical trajectory have had to change course with all sorts of different challenges in the supply chain, and those that can take advantage of those challenges are going to be the winners. I also think the other area that there is a mismatch of supply and demand is the fact that a lot of investors are not investing as early as they need to and they can do. And that's where the real winners from the investment perspective are going to be, in my opinion. Investing early in ideas that then can be delivered on is going to be critical. And I think that there's a lack of capital investing as early as could be. I feel it quite lonely on many occasions with many of the businesses that I work with. And I just see them slogging away, building value, but without the investment support they necessarily need, while a lot of money is still sitting on the sidelines waiting to come in. So I see it as being a new world order, and I'm excited about it, but I also think we need to make sure that we're being smart in where we deploy capital.
That's a very, very good point. And I do want to come back on some of those areas of where capital is or is not going as well. And you're bringing up, again, one other thing I want to touch on before, Nicole, I come to you is that matching process, right? There is definitely a disparity right now between that supply and demand, and that match needs to be made. And investing for the right reasons in the right companies is definitely something we all need to be aware of, especially in a market as I think earlier today on Blockchain and Crypto News, I announced 3, maybe 4 new funds and forgot one. Huobi Ventures launched a $10 million fund on top of $300+ million funds I announced earlier today on September 14th. So the fact that there's $500 million of new funds announced today just goes to show, and they're all focused on early stage. And so is that good or bad? And we're still going to see is how that's going to play out. But to your point, Andy, I think we're all excited. We're all here and we're ready to watch this happen and be a part of it as well. And Nicole, your thoughts to add on to Raghu and Andy's and what you're seeing from an early stage, especially with how women invest and the type of investors, or excuse me, the types of companies and founders you guys are investing in. How are you seeing things from your perspective?
Well, there's a lot of money going out into the marketplace, right? There's small amounts of money, or maybe not so small, given the raise numbers these days, that are going out to a lot of companies. What I don't always see is that the entrepreneurs know really how to execute and deliver. And that's what it's all about, right? To increase that valuation, to take the company to the next level. So I think it's going to be really important that these funds are really taking care of their portfolio companies. One of the things that we do at How Women Invest, which is really powerful, is we put a SWAT team on every single portfolio company. So we have experts in the industry sector and across functions. So there might be a legal expert in, say, healthcare, or there's a marketing expert in healthcare on this SWAT team to help those companies really grow, because at those early stages, typically those entrepreneurs don't know, necessarily where their value drivers are. And they may need help with customer acquisition and things like that. So I think it's going to make a big difference that we step in as investors and help our portfolio babies.
I love it. Portfolio babies, our portfolios, those companies that we are in. But Nicole, you called it out perfectly with Andy there as well. Companies need that support. They need that added support. Even at the earliest stages, a lot can go right, a lot more can go wrong. And as these markets are, again, compounding and growing fast, more capital doesn't necessarily mean more success, or that you know what to do or what not to do with it. And so working with investors like yourselves, all of you here on this panel, is huge and important for founders to know when you're raising $1 million and you get 1.5 million, and you've got great added investors that come in to oversubscribe your round. What do? How do you efficiently use that additional capital that has come in to the company to help grow as well? And Jason, I want to come to you because I know you're shaking your head. You also support, all of you do, your portfolio companies and the ecosystem surrounding it. But anything to add on to Raghu, Andy, Nicole, and their points, as well as how you're seeing all this happen?
Yeah, I'll keep it brief, but yeah, there is a lot of capital out there, more than we had last year, and it accelerated the investments. We had a record year last year, after though it started out pretty slow. This year, more records are being broken, so their capital is always going to be available, no matter how the market is, for the good opportunities. Now, of course, there may be a looming crash at some point, hopefully not, but that just happens. It's natural, it happens. But I think in the investment space, there are going to be opportunities no matter what. Investors are always going to be investing in bad times. A lot of great companies get started. And in just Chicago alone, we've had 12 unicorns, I think now 13 in this year alone, which is more than last year. We have a huge growth in the Midwest, and Chicago is a big part of that. So you're starting to see other regions in the world that are really having these large rounds that are getting these billion-dollar valuations. And there's just so much more earlier stage capital out there as well, that there's and it's going to diverse founders and companies, and that typically don't get as much capital. So that's only going to accelerate. So I still think we're going to be on this wave for a long time, but at some point there may be a correction in the market. But there's so much money out there. I think we're good for a while.
Well, and to your point, even in bad times, right, great companies are created, and we're seeing that in 2020 or 2019, 2020, and 2021. But from a funding perspective, 2020 only saw a few little blips of where funding stopped, and if anything, are slowed down. And then things were adjusted for, and we actually saw some record numbers in 2020. But then here we are in 2021, halfway through. So a few months ago, and I think July, midsummer, we were already surpassing the number in terms of total invested capital from the VC perspective in that first 6 months than we did all of 2020. And 2020 was, again, a record year. So just think of what else we're going to do here in this next quarter. I mean, I think in the blockchain industry, I was tracking about 5 billion was invested per quarter. We're almost out of the third quarter. We've got almost $20 billion plus growing into just one industry. We haven't even talked about cybersecurity or bio or food. So many great industries. But Vandana and Harsh, I want to get your opinions on this because everyone's giving great advice thus far. And the big question I'm going to come to next is, what advice do you have for those founders that are listening or tuning in a market that is like this, as we've all been through these cycles? But Vandana, first to you. I mean, what else are you seeing in terms of the early stage industry? You've done 160 companies and growing. You're looking throughout Southeast Asia and greater. Talk to us about your perspective.
So, primarily one expects to have a strong team of individuals with a large skill set. At an early stage, mostly investors like to invest in the right people over the right product or service. And of course, it's a plus if they already have a product which is doing well in the market, and if they figured out their product market fit, and if they already have a minimum viable product. And another thing to look at it is how we as investors can add value to the company. Now, for the best investment in terms of the amount and the investor relations, founders, entrepreneurs need to research the investor market and find an investor that is active for the sector it works in. And one of the most important parts of impressing potential investors is the pitch. They need to have a well-researched, pitch deck. It should be precise with all the necessary data that the investor would want to know. The pitch should include all projected data and justifications for those projections. So, there are lots of factors that add on to this. The complementary team, like I always advise, all the founders to have a CFO, have an advisor on board, have the right kind of, professionally made pitch deck. Not only that, hire the right kind of investment bankers who have the right kind of relationships with these investors, because ultimately investments do work on the basis of relationships as well. And I have seen, in 2020, I had closed 4 deals sitting on one chair. So digital transformation has really helped. There's a lot of capital. The hot sectors are fintech, edtech, agri-tech, health tech, food tech, IoT, robotics. These are some of the hot sectors which one could look at.
All very, very good points. And Jason just sent me a message real quick that I want to call out. I don't have the exact source of this, but I'm gonna give credit nonetheless. In Q1 2021, so Q1 of this year here in 21, was about the same amount invested in all of 2019 in just the Chicago area. So the Chicago Midwestern area in terms of venture capital saw in just 3 months the same amount that was invested for an entire year, being 2019. That should go, again, speak waves to everything being said today. Harsh, real quick, any of your thoughts as to how things are going, especially coming from India right now? A lot of venture activity globally, money coming in, and locally acting around supporting variety of industries as well.
So definitely there is plenty of opportunity, right? So capital is like potential energy, right? If there are any physics junkies who are watching this, they understand potential energy. That's what capital is. Last year, the potential energy was a little silent, right? So it's kind of, springing back, bouncing back this year. And that's why you're seeing these crazy investments happening. We've seen almost over a dozen unicorns within India. We saw a successful IPO by a startup which is still negative, right? This is actually the first for India, where you have a company doing an IPO which is a net profit negative company, and it did a very successful IPO. So that's a sign of how the changes are happening. So definitely there's a lot of fund out there, a lot of capital out there. The challenge right now, to be quite honest, is not the capital. The challenge is getting the right founders and the right ideas, right? That is the real challenge. Money is no longer an excuse, to be quite honest, in today's day and time. So that is why, if a startup comes up with brilliant idea, there's literally an over opportunity of funding available. Another thing, an interesting thing which is happening in India particularly, is the first generation of startups which started in 2008, 2009. Now a lot of those founders, a lot of those VC funds have gotten an exit, right? So suddenly, because of that exit, a lot of angel investors are back into the market looking to make more investment. A lot of those founders and a lot of the key leadership team of those companies which were there, they have a lot of capital for investment, right? So they come making a lot of investments. Plus, we are seeing a lot of second generation entrepreneurs, who are like family of entrepreneurs are there. They are getting into the startup space. Even some of the leadership teams of some of the earlier companies like Flipkart, Paytm, they are branching out. They are creating their own companies, right? So it's very easy for people who have been in the part of the startup space for them to raise funds because they are already proven and tested people, and they've done phenomenally for the respective companies. So VCs are looking for these kind of people to invest in. So that is why the opportunities are tremendous. All it comes down to coming up with that good idea to work with.
Absolutely. And as we are talking about this subject, I just got a notification on Twitter right now that Matchstick Ventures have launched their third fund of $55 million to focus on pre-seed and seed-based investments throughout the mountain region of the Rockies in the United States. So continuing to support everyone's points here that this is something to be paying attention to. But in your closing thoughts today, of course, where can everyone find you to reach out to have those conversations and hopefully have you as an investor a part of their company? But more importantly, what advice would you give to founders right now in a market like we are in from an investment perspective? How to handle it, how to think about it, and how to prepare for it as well. Raghu, I'm going to start with you, and then Andy, and I'll come around. Raghu, kick us off. Closing thoughts, advice to those founders out there in this first time in this type of market opportunity, and then where can everyone find you?
Sure. I think given that there is a lot of capital, I think it is important to have the right team, as Harsh and Vandana pointed out. I think the team is everything, and team is not only the founders, it's also the extension in terms of the advisory boards. And for a tech company, that is actually the technical advisory board and the business advisory board. So I think those are very, very important because they can not only bring credibility from the investor side, but also from the customer side if you have the right people there. And they can also, in many cases, get you execution support. Either they can come in part-time or they can bring the right people. Because every stage, especially during the early stage, you do need the right support in terms of that. So I would really focus on that. The second thing is that I think the technical part of the leadership is very important because it's important to deliver. It's not anymore about just kind of saying we can do it. It's just the business aspect will not just take you. You need to have the real technical. I mean, ideally the MVP fleshed out with customer support. It's very, very important to do that because otherwise the scale up will not happen. The hyper growth models we're seeing, of course, it can go more organically, but to do hyper growth, you really need to have that perfect storm of the team, the technology, and I would say all the capitals, right? The financial capital, the human capital, and the intellectual capital. So my advice is to find the right team, and I can be connected. I'm happy to connect on LinkedIn, Raghu S. Rao, and I look forward to helping companies in the early stages, whether it's pre-seed or seed.
Wonderful. Thank you very much, Raghu. Andy, to you. Closing thought, and where can you be found?
Yeah, so have a look at our website, adapcapital.com. I'm also on LinkedIn, Andy Lois, have a look there. I think from the entrepreneur's perspective, I would just encourage entrepreneurs to realize how much power they have and to own the power, not just in terms of the current marketplace, but generally. I think it's important to make sure you're hitting the milestones and laying the foundations. It's also important to make sure that you're acting with dignity and respect for yourself in the negotiations and conversations with investors. And then for investors, I think it's all about finding ways to be adding value. It's not just about capturing value. It's helping to create value and helping to add value for the entrepreneurs in their journey. So that's what we're about at ADAP. We believe that we can approach poverty differently, and we think there's a lot of value to be added and a lot of exciting opportunities out there. So join us on the journey, adapcapital.com.
Wonderful. Thank you very much. Harsh, where can everyone find you?
Hey, just a short summary of the discussion, right? The founders literally have a lot of options right now. It's really important to come up with a unique differentiation, right? The most important thing which I would suggest is to focus on a small niche first before trying to expand too quickly. A lot of times what happens is founders tend to look at a very broad market and they want to target all of that, but it's not that easy, right? Focus on a small niche and then you can expand. And that would be the session which I would kind of give, not to have that kind of clarity or focus to serve that specific customer. So that is the advice which I would like to give to founders. And to investors, coming back to Kyle's original point, there's definitely a lot of money primarily for software startups. I'm not really seeing that much capital being deployed for hardware startups, right? So if there could be some capital which is available even for hardware startups, that could be a great move forward as well. So if any startups need for any help in terms of growing their companies or in terms of helping them with the fundraise, feel free to reach out to me on LinkedIn at Shethia. Would be happy to help out. Thank you.
Wonderful. Vandana, quick closing thoughts, and where can you be found online?
Yeah, so, my closing thoughts are VCs have intense expectations that startups need to deliver. Now, to persuade a VC to invest in your startup, you will need to begin by understanding, their expectations. And VCs look to maximize the rate of their capital generation. A startup with the potential to deliver what the VCs want is one that has a scalable business model. Now, securing the support of the right VC is a tough nut to crack. The challenge, however, doesn't end with bagging a successful deal. More than acquiring the funding, you will need to work harder to deliver on your promises to your investors. We are here to help you. I could be reached on my LinkedIn handle and my website www.convanto.com. Anybody requires any kind of fundraise or documentation support with regards to pitch deck, financial models, and business plans, please reach out to me and I'll be glad to help you all.
Wonderful. Thank you. Jason, quick closing thought. Where can you be found? And Nicole, you're going to close us out today just after Jason.
Yeah, there's a lot of funding options, as we discussed, more and more today, and more happening all the time. So just do your research as an entrepreneur. Make sure you're reaching out to the right people that you fit within their thesis, and whenever possible, try to get in front of those investors through a relationship. I know it's not always possible, but as an entrepreneur, you need to be resourceful to find the right people to talk to. For those that want to get a hold of me, you can, of course, find me on LinkedIn. Also, my email is jason@propellant.vc. So again, thank you for having me, Kyle and Latoken.
As always, Nicole, close us out. Closing thought. Where can you be found?
Well, I always love to remind entrepreneurs how critical it is to fall in love with your business every day, every morning, because you're going to hit bumps in the road. And if you can find ways to just love it, it'll help get you through. But also, I really wanted to touch on being resourceful. It is so critical. And look outside of the typical, platforms or people immediately around you. There are things like Hello Alice that has, other funding options and/or people resourcing support. Those types of things can be really helpful. And by all means, please make sure you have diversity on your team, people. I don't even look at things unless there is diversity. So that may be gender diversity, racial diversity, cultural diversity. It brings ROI. So bring on a diverse team and advisors for sure. And for reaching me, you can go to Outfront Solutions. So it's www.outfront.solutions. Or find me on LinkedIn, and then on Twitter, I am TechieCat. Have a great day.
Wonderful. Jason, Raghu, Nicole, Vandana, Harsh and Andy, thank you all very much for all these great thoughts and insights and everything shared today. Entrepreneurs who are tuning in, if this is your first time fundraising or second time and you're raising at that early stage seed, go back and listen to what we just spoke about, but also make sure you reach out to each and every one of these investors, as they would all love to hear from you and provide further information as to how to progress in those future rounds as you are building your company. And as Nicole said, fall in love with what you're building, make a diverse team, have fun, and enjoy the ride as you do it. With that, everyone, have a wonderful day. Please do reach out to each and every one of our investors. Remember to add context, where you heard us, where you met us, and what you would like to continue the conversation about, so it's productive for all. Big thank you to the Token team, to Maria and Hasmik for making today's episode possible. I'm your host, Kyle Ellicott. We'll see you back here tomorrow with more VCTV. Everyone have a great day. Take care.